Good morning, folks. So we're just getting live here. Excited to be back with you all for this week's edition of Back to the Futures. It should be a lot of fun. So let's really quickly get through the risk disclosure here. And the way I like to look at risk is you've got to manage it first and foremost if you want to survive at this game. That really is the bottom line. If you're not managing your risk first and foremost, you're not going to survive as a trader. And a good way to contextualize it is think of this as a business. Don't think of it as a fast path to riches. Think of it as a business. And what we're buying and selling really is inventory. We're hoping to capture a positive spread repeatedly. That is the nature of what we're doing. And that's really how we should be treating it. And I think that's an important way to look at just trading in general. The idea that if we manage our risk carefully and we build into consistency, we can find that path to success. It's not as fast as some people may hope for. I know there's a lot of folks that say, hey, I can turn $10 into $1,000,000 in a half hour. Maybe that's a bit of an exaggeration, but the reality is the folks that work at it over time, that turn it more into a business, are the folks that are going to be around continuing to trade and building into their success in the years ahead. Now, let's talk a little bit about me. So, I've been doing this for about 20 years, both trading and investing. And it's been a really incredible journey, one of self discovery, because you do learn a lot about yourself trading. In fact, it's probably one of the most psychologically challenging things to do. That is to trade, to learn about your limitations, to get your emotions under control, to learn about what are the weaknesses that prevent you from making money. Like a lot of people will hold losers and hope that they turn around and they'll cut winners too quickly. That is a very common problem that people have early on in trading. Some people never recover from it, but the fact is, if you put in the work, you can. You've got to rewire yourself, your own psychology, to succeed in this game we call trading. The way I've been able to do that is leaning more into a systematic approach, taking a more data driven approach. That's why I like building tools that help to define that data. So when we look at my weekly pivots or my SPX options visualizer or other areas of the market where I have charts and tools that help to guide my journey, that's one big reason why. It takes away from just doing this more discretionary approach, which often for many traders, especially newer ones, ends up being more sort of flying by the seat of our pants. And we know that over time that doesn't work. It doesn't work if you're running a business. And that's exactly what this is. It is a business. You've got to respect it and treat it that way if you want to be successful. So I'm not saying that systematic trading is for every single person because we're all wired differently, but that is what worked for me. That's what's worked for a lot of the folks I've coached over the years is to lean into a more data-driven approach have a framework, a methodology for how you approach trades, how you manage your risk, and how you manage exiting those trades if it's a successful trade as well. These are concepts that seem pretty bare bones simple, but you wouldn't believe how many folks get into a trade and they don't know how to get out. And if that's been you, then this is exactly what I'm talking about. The idea of you should already know what your exit plan is before you hit the button to enter that trade, whether it's the buy button to go long or the sell button to go short. You should know what your exit plan is, how much risk you're willing to take on, and what your reward you're hoping for your reward to be. And that reward should be 2 to 3-fold the risk you're taking on. There should be some asymmetrical reward to risk ratio. So let's talk about those weekly pivots this week because we are right up close. In fact, we're just about 15 minutes away, 14 minutes away from the market open here. We've got a major pivot overhead, and we're going to go into that as we get into the screen share of Bookmap and also of my other charts. But we can see that this ES pivot, 64.53, we're trading just below it at 64.51 right now. This is a pretty big level. It's acted as support. It's acted as resistance. In my mind, it's going to be pretty decisive for whether or not I want to look for fades or longs. And I think we're going to resolve this weekly pivot during the morning trading session as to whether we're going to be trading above or below it. At least that's my inclination coming into today. Again, it does feel a little heavy, like we could get some downside continuation. And part of that has to do with Trump firing the Fed's cook. And I don't mean their chef. But there is a governor there that's alleged to have committed some level of mortgage misrepresentation, having more than one primary residence. And that's not right. I'm not going to get behind them and say it's the right thing to do. But apparently, this is shaking up things because now it's given the president's administration an opportunity to put another one of their picks into the Fed, who may even be in the running for Jerome Powell's job as soon as May next year. And so this caused the market to roll over last night. And we know yesterday as well, we closed right around that pivot level. So we've been kind of consolidating, chopping back and forth below this pivot overnight. The initial reaction was pretty negative. We came off those lows. And as we approach the market open, we're going to be watching that 64.53 level pretty closely. And then on NQ, we're still a bit above this level for the weekly pivot, 23,113. But I still think that's going to be a level to watch this week, to be bullish above and bearish below. Now, if we look at the pivots chart, this is my weekly pivots chart. It's available on our Discord to members anytime markets are open. And these are automatically calculated major pivots that I like to use for swing trades. You can get a sense of the momentum here. You can see we're still above the BGL. In this case, that's going to be a 21-day moving average, exponential. We're also above the Ichimoku cloud here. That illustrates we're still in positive momentum territory, but we are challenging that pivot ahead of the market open. And so that is what has me concerned near term. You could see that when we challenge this pivot level, sometimes we get all the way back to that lower pivot, which is about 100 points lower, 6354.25. We could also see this current pivot level we're at has been both resistance and support in the past. So it is a decisive level to keep our eyes on. Now, looking at the SPX options visualizer, you can see one big thing that stands out in my mind. We are just barely in positive gamma here, just barely. Now, when we were closing out yesterday, we were looking at being just modestly into negative gamma territory. And I think we could have a little bit more of that to explore today, but we are just barely in positive gamma. That flip level is going to be 6440.75 for the calculated gamma flip. And I think if we do build some acceptance below this pivot, it's pretty likely we do flip back into negative gamma territory. And that is something to keep in mind whether you're a day or swing trader. Negative gamma means you get into a chase environment That chase environment is one where you have dips get sold into, rips get bought into. It exacerbates volatility a bit. You get some continuation in the choppy moves that can really push people out of both sides of the trade. So one thing to do if we do get deeper into negative gamma is to look at widening one's stops a little bit to account for that potential um, exacerbation of intraday realized volatility. Another thing to keep in mind, if you look at this chart here, this is the New York Stock Exchange percentage of stocks above their 20-day moving average. And you can see right now we're at 75.11. So this is a bit overbought. It is an expansion of breadth. That is a healthy sign, but it's getting a little bit overbought. You could see prior episodes of this being overbought have led to corrective impulses, and I don't know that this time is going to be much different. So keep that in the back of your head. If we get below that negative pivot and we build some acceptance, we start to get more into negative gamma territory, we do have an overbought market that could continue lower from here. Now let's talk about an exclusive deal that we have for Bookmap. You can get up to 40% off your first billing period. Visit TraderA.com/bookmap and scroll down to the special offers. That's TraderA.com/bookmap. And if you'd like to learn more about Bookmap and check out the community, visit their Discord. Go to discord.com/invite/bookmap. I'm there every Tuesday at 9 a.m. with Back to the Futures. And with all that being said, let's dive right in to Bookmap here. And we're also going to bring up a couple of these other charts. And you can see just ahead of this market open, we are continuing to challenge that pivot level. I'm just going to bring that on screen here because it's been really interesting to watch this during the overnight session. It rejected pretty cleanly around 6:30 a.m., right back down to an intraday pivot, that 6443.75. We found support from there, and we're right back up to that major pivot again. And folks, if you're out there and you have any questions, feel free to pop them into the chat. I'm just going to start checking on those. And good morning to everyone out there that's joining in. And just give me one moment. I'm just going to share those pivot levels on X as well, or Twitter, whatever we call it. I've lost track. It's one of those things. It's one of those two. probably. All right, I popped that out there. So if you folks are looking for the weekly pivots, they are on my feed on X here. And calendar is pretty light overall. We did get durables. They came in a bit better than expected at negative 2.8% versus a forecast of negative 3.8%. The prior reading was pretty nasty, negative 9.4%. So certainly coming in better than the prior reading and the forecast. We did get durable goods. They came in better than expected. Core durables 1.1% versus 0.2% forecast. So the core came in better and the headline came in better. We also got Case-Shiller 20 year over year. That came in at 2.1% for the home price index. And then finally, we're going to get consumer confidence in at 10 a.m. with a forecast of 96.5, prior reading of 97.2. So forecast is for this to come down just a bit. And then finally, we do have a 2-year note auction at 1 p.m. Eastern. And who could forget? We've got a Trump cabinet meeting at 12, so we may get some interesting headlines from there as well. But the big data point that we'll be watching during the stream this morning will be consumer confidence. And I'm just having this chart on screen here for a moment just to illustrate again the importance of these pivots and how they can help us map trading. I know a lot of folks spend time trying to find which levels to watch. Well, this makes that process a lot easier. It automates the vast majority of it between the options levels and the market derived pivots levels. You've got a little bit of everything. You don't need to go and spend hours looking at charts and drawing lines where you think there may be important areas. Let the algorithms do the work for you. And that's exactly how my pivots and options visualizer layer together elegantly to help us map those levels out. So let's also look at this overnight session here in Bookmap. We can see relatively uneventful. We did get that headline about firing Cook. We took a pull lower immediately. This was when the headline printed right here. Then we had another larger pull lower. And since then, we've been consolidating. So we've got, about 11 hours of consolidation or so under our belt here. Often is the case, the longer you consolidate, the more likely it is you're going to get a nice size directional move. So I am looking for that directional resolution today. And again, I am feeling like it could be a little bit heavy, but let's see if we reject that 64.53 pivot. Got just about 11 minutes left until the U.S. market opens. And really, I think the most important data point of this week that everyone is watching and waiting for is going to be NVIDIA's earnings call tomorrow evening, scheduled for 5 p.m. for the call, 4:20 for the earnings. I will be covering that live as it comes out. I think that'll be an interesting one to watch. This is a company where pretty much the collective fate of the market's AI narrative rests in the capable hands of Jensen Huang and how shiny his leather jacket is. It's a joke, of course. Or is it? But that is going to shape a lot of the narrative, really more than the earnings themselves. The guidance, and the color behind that guidance, I think, is going to be something the market's going to try to hang its hat on one way or the other, because NVIDIA is at the center of this whole generative AI narrative. And for better or worse, the demand for their GPUs really sets the tone for the underlying excitement in a lot of these growthy tech companies. So we'll be watching that. Again, NVIDIA's earnings expected tomorrow after the bell around 4:20 p.m. with the call at 5 p.m. Eastern. We also have a 5-year note auction tomorrow, but I think all eyes on NVIDIA earnings. We may even not have too much exciting trading action until NVIDIA earnings are out. So that is something to consider. We may end up getting a bit of a chop day, but I'm going to respect the 20-minute opening range. And I'm going to respect where the options flows give us a sense as to what the range is between the two most active calls and puts. Between the two, you get a sense as to what level of volatility you may expect during the trading day. Yesterday, the options range and the opening range were pretty narrow for much of the day, and we had a pretty narrow trading range. So we'll see what today brings us. With that long period of consolidation overnight, we certainly have the coiled spring that if the market wants to show us some volatility, some range expansion, it's in an ample position to do that. We have that energy kind of stored up, but we may continue to store that energy up until tomorrow's earnings release as well. So, again, going back to what I said earlier, I do feel like this is a little bit heavy with the way it's trading. I'm going to respect that 64.53 pivot as well. That's going to decide my bias both intraday and over the week. Above that level, I'm more bullish. Below that level, I'm more bearish. And I will hang out on the stream just a few minutes after consumer confidence so we can digest the number and the market reaction. But the way I look at most of these data points is that you're looking for outliers for them to really matter. If it comes in within range, let's say between 95 and 97, I don't think it's going to have much of an impact. But if it's, say, 94 or below, could have a negative impact. If it's 98 and above, could have a positive impact. And I think we're back in the realm where we can read these headlines at face value because we already have some assurance that the Fed is likely to start cutting in September. So it's no longer just bad news is good news. I think we can look at the consumer and say, if they're feeling better, that means they're more likely to spend. That would be earnings positive. And since we do have some concerns growing from some of the retail earnings that we've seen lately, I think a good consumer confidence number would be well received, and a bad one could lead to some selling. Yeah, and we were talking, Sam, we were talking about gold last night on the Discord, on the Trader Aid Discord, that it was getting a nice bid. So you mentioned that in the chat. I think that's a great mention because I'm still very bullish of gold. And when you start dismantling the Fed, whether justified or not, you are going to create more uncertainty, and that uncertainty is going to put a bid under gold. It's going to sell off the dollar, and it could even make our debt a little less attractive near term. But overall, I still think gold with a $4,000 price target is very reasonable. And silver potentially getting back to its all-time highs later this year or early next also seems like it's quite likely. So I'm still adamantly bullish on the precious metal space. I still think there's opportunities there. And what really impresses me is this is seasonally a difficult time of year for the precious metals and their miners. And yet they're overall pretty resilient here. So that also just gives you a sense that there is this underlying bid under gold, and it really doesn't want to get below the 50-day moving average. In fact, we'll pull up a chart here as we wait for the market to open. All right, so I'm just going to pull up this chart here of gold on Finviz. And you can see how it loves honoring that 50-day moving average, doesn't tend to hold below it for too long. Right now, we're pulling back above it. Gold, sort of like the S&P this morning, although over a much longer time frame for gold, it has this consolidation look. It's been trading in a range. It's coiling up like a spring. And I do think it has room to resolve this pattern higher because it's coming from a structural uptrend. And so far, it really hasn't done anything that concerns me on the bearish side of things. All this looks pretty bullish on a daily chart. On a weekly chart, it does look a little bit extended. But again, going back to this daily chart, I like this look of long-term consolidation. At this point, we've been consolidating pretty much for 4 months in gold. The last time that we saw consolidation like this, I want to say, was closer to the end of 2024. So we'll see if it has a similar resolution. But overall, I'm feeling pretty good about this having some power to continue higher to new all-time highs in gold and then eventually in silver. And ships, teacher, I know you had explained this before, but what happens if it goes to the hot call or the hot put? So for me, that usually gets me out of the trade unless I see flow building at higher strikes. So I love to follow the flow, and if there's a decent opportunity, I'll trade it. And let's say we're trading bullishly, and we have a microstructure uptrend in the S&P 500. That's an intraday uptrend. You've got flow in excess at the two most active calls versus puts, so it favors those strikes. And you hit the hot call. If you hit the hot call and you're not seeing the flow roll higher, like there's a warm call above it that's growing even faster than the hot call, then that's a great place for me to take off that trade. Because at that point, we've realized where the market has the most confidence of us going based on the way options are influencing the futures. But on the other side, if you see the warm call really growing and growing at a rapid clip that suggests it could overtake the hot call, then I'm going to keep runners on. I'll take off my core at the hot call, like 2/3 of the position, but I'll still keep 1/3 of that position on, hopefully to realize an exit at that, what was the warm call, what I'm looking for it to become the hot call. And that's how I'll trade that type of a setup. There's some conditionality to it. It's not that cut and dry, but it's pretty close to that when you're starting off. I think some of the nuance is if you expect that to continue to roll higher, you might want to have more scaling out. So maybe you do it in 3 sections if you think that those strikes could roll up more than twice. But overall, it is that simple to follow the flow when you're in a trend day that favors that flow. When that flow on the top 2 calls is, let's say, 30-40% or more in excess of the top 2 puts, you have a situation where it's much more likely you're going to get right to those levels. Now, I don't want to be greedy, so I'll usually set my exit about a handle below. So let's say the hot call is like in S&P 500 futures terms, let's say it's 64.60. I might set my exit at 64.59 just to make sure I get that fill. Because if you're more likely to get filled, you're more likely to get your next trade in as well. So I don't want to be greedy in case we miss it, in case we don't ding it. Same thing with those really big areas of offered liquidity. And by the way, folks, market is open here, looking just a little bit heavy off the open. We did see 100 contracts sold in an iceberg order just before the market opened. And then we have a little bit more aggressive selling just off the open here. Now we're starting to see some real buying coming in, a stop run. And again, this is why I love to watch the open and the range it forms, because you've got a cross current of institutional flow. A lot of the stuff that didn't resolve at the end of the day yesterday, combined with folks that have been waiting for the market to open and to transact. The first half hour and the last half hour are usually the busiest times of day. So it's a good time to watch the price action, look for the ranges that form, particularly in that first 20 minutes for the way I trade. And then you can get a sense as to A, what the range is. That can give you a good idea as to how volatile the day is going to be if you're going to get a decent trading range. Like yesterday, we had a 10 handle opening range. It wasn't a very exciting trading day until the very end. And then after hours, of course. Let's see if today's trading range shapes up to be a bit more exciting. So far, we're getting about 6 handles out of it, but we'll see where this goes. It looks like buyers are going to try to push this. We did have a buy stop run, that is to say some shorts stopped out, 299 contracts stopped out here in that move. And we are pushing above that pivot level, that 64.53 here. We're just starting to push above it. So while we watch this, ships, I'm assuming you're still listening, but for the benefit of everyone listening, the other side of that trade is if you hit the hot call and you reject it pretty hard, you can get a fade trade from there, sometimes a reversion back to for wherever the breakout started. So, that's another thing to keep an eye on. Some folks like to get spicy and trade both sides of the hot call and the hot put. So you get to that level and then you take the other side of the trade on a reversion. If the flow isn't rolling up in the case of calls or down in the case of puts, those trades can work. They have a slightly lower probability of success. I tend to just favor trading to those most active strikes when the trend favors them and when the flow favors them. So hopefully that is helpful to you. We can see price now testing this key 1 negative level. That is a level of put exposure on the S&P 500 chain that typically would offer just a little bit of resistance. And then as we push above it, you're likely to see some follow through. So we'll see if we are seeing a little bit of resistance around that level, but we're going to have to kind of just watch and wait and see if we're resolving above it. We can see more interest growing as well in some offers overhead, going all the way up to yesterday's most active put strike. But I will say, for buyers, I like that we pushed above our weekly pivot right off the open. I'd love to see them hold above it. Again, 64.53, so we're right there. And rejecting off of key 1 so far. You can see how important these pivots are. It went right back to that 64.53 pivot, held it as support just momentarily. We're going to shift screens real quick to show that. So here we are. Here's our pivot, our weekly pivot overhead. We know it's been resistance before. It's acting as support at the moment. It has been support in the past too, if you recall earlier in the presentation when I showed the daily chart. And so for me, what I'm doing right now is I'm watching the opening range. I like to watch the first 20 minutes or so to get a sense as to what the price range may be for the day. The larger the opening range, the more likely it is you're going to have a bigger range during the trading day. And then the other thing I'm watching is those early options flows that could give us a sense as to what the most active and influential market participants think about the price range for today. And the reason I say that, the S&P 500 trades about 1.3 trillion of notional every day. And at this point, I want to say close to 70% of that volume is expiring the same day. Not every day is it that 0 DTE bound, but a lot more often it is. The range of exposure has shortened, and something like 85% of the options traded expire within a week. So you're talking about a much shorter time horizon for the way that S&P 500 options are trading. And look at this, we're getting a bit of a pull here. These candle bars on the bottom, by the way, are delta candles. So you can see that that was a pretty aggressive buy right off the open. Now we're having a pretty aggressive sell based on that delta volume. Let's go back to Bookmap here. You can also see that in those red bubbles. These are red as in selling delta bubbles. So much like the volume bars I showed you on the previous chart on the bottom, we're showing delta volume by time. These bubbles do the same thing, but in a more granular representation. So you can see that aggression is growing here. We are back below the 64.53 pivot, poking our heads just above, seeing some resistance around that key one level we talked about, and now rolling over close to where we saw the opening lows. Again, this is why it's difficult to have too much of a bias right when the market opens. There is a cross current of large institutional flow hitting in shares, ETFs, options for indices, options for stocks, options for ETFs, futures. It's a confluence that you have to be mindful of. And for us, we're small fish, right? We're not moving billions of dollars around, which means it's better for us to try to swim in the wake of the whales that are, rather than try to get cute and outsmart the market. So following a trend, letting momentum be your friend is generally the best way to go when you are a smaller trader and you have agility on your side. That means you can exit a whole position in a matter of seconds or minutes without moving the market. So now we've just gotten back to that low. Let's just take a quick look at something here. Okay. So we've gotten back to that low, just maybe a little bit below it. And now we're starting to rebalance, seeing some buying flows come back in. The best look for the buyers here would be go right back through that pivot and key one, build some acceptance above, and don't look back. That would give us a nice actionable low here to trade off of. The best look for the sellers here would be to make a lower high and then push this thing down to a lower low. So that's why I'm kind of looking at this thing from two different dimensions. We're just 10 minutes into the trading day. We don't have much of a range yet. I'm also looking for some range expansion, ideally. That's what I'd like to see. Doesn't mean it's going to happen, but for me to want to trade this tape, I need a little more than a 9 or 10 handle opening range in the S&P 500. And again, we are back testing that pivot level. So here we are right back at that 64.53 pivot, testing it from below, trying to make a push above. Buyers still showing some decent volume, some decent aggression. It's kind of been handing back and forth. First 5-minute candle, very much favored by buyers. Second 5-minute candle, sellers tried to show their aggression. They got us back down. They could not make a new low. And they didn't show the same level of commitment that buyers have. So far, buyers are favored by this opening price action from what I'm seeing. But again, we need to build some acceptance above this pivot and ideally above key 1 negative. We can see we rejected last time just around that level. Let's take a look at the NASDAQ here for comparison's sake. To me, it looks more robust. The NASDAQ's got a nice strong bid. There's aggressive buying volume coming in. We did make a new low, but it looks like the NASDAQ buyers want to try it. Yeah, they're taking it to a new high versus the S&P that is lagging. So we're going to watch the NASDAQ here a little more closely for signs of directionality because it looks like it wants to take the lead here, and it looks like it wants to push us right back to this point of control, key 6 negative confluence area. So we'll watch the NASDAQ closely here. It has just made a new regular trading hours high versus the S&P. But this is what I would want to see if I want to take a bullish trade. Again, I'm waiting for that 20-minute opening range to give us a little bit of a better clue as to what we're trading against in terms of potential range expansion we could see, and also whether or not we get some chance of a trend day here. We should be getting opening options flow coming in pretty soon as well. But we can see with both of these charts, we're deeper in the negative side of the options chain. That's why we've got these key negative levels here. So those are levels that when you push above them, you are more likely to get some positive continuation, and you're also more likely to see some of these hedges start to get covered. You can see that with the NASDAQ as we push above key 4 negative and key 1 negative. We had a nice juicy rebound on that, even as we push above key 2 negative as well. You can also see on the volume profile, there was some aggression overnight by sellers. They pushed really hard down here. You could see that earlier, even this morning during that overnight session. And then once again during the European session. So what I mean is this tells us there are sellers that are getting trapped off sides in this trade. The further the NASDAQ pushes away from that aggression node on the session volume profile, where there was 885 sells in excess of buys, just around 23,450, the more likely it is you get some continuation. So it's just something to keep in mind. Just the same for buyers that get caught off sides. If these buyers up here get caught off sides from a downward move, they're more likely to become motivated sellers. So it's good to watch the session volume profile just to get a sense as to who may be more favored by the price action. Let's go back to the S&P. S&P now steadily grinding to new session highs, pulling above the pivot and starting to build above T1 negative. Still not a particularly inspiring opening range here, just about 10 handles. That's similar to what we had yesterday. We're 15 minutes into the session here, so we've got about 5 minutes more for some range expansion, hopefully, maybe. Fed's barking, saying long-term interest rates are within historic norms earlier, which is true. That's one thing I always found interesting about so much lamenting regarding where rates are right now. They're pretty much where they've been throughout history. on an average basis. Let's just take a quick look at the heat map here, the S&P 500, while we're watching the market. And we could see Eli Lilly getting a good boost here, but overall, not a lot going on. Noticeable weakness in some of tech. Maybe that's where we'll see some of the rebound in the NASDAQ come from. NVIDIA pretty flat ahead of tomorrow's earnings. Microsoft pretty flat overall here, but some weakness in Apple and Google, albeit modest. And some strength in Broadcom, AMD, Qualcomm, and Oracle. And shifting back to that pivot level, we can see that this is, again, being challenged. This has been a pretty decisive area for several weeks now. And today, once again, the market kind of giving us signs that between this pivot level and key one negative, it is looking at these levels just the same as we are. This is the most aggressive sell delta we've seen so far, and we're only 2 minutes into this 5-minute candle. So sellers definitely getting angry here. Look at this. Let's switch back to Bookmap. You can see now we're pushing towards session lows. They really are showing some more aggression here on the sell side. And we do have some initial options flow coming in as well. It looks pretty balanced from what we're seeing. So far, about 1,000 at the hot call, 1,000 at the hot put. Hot call looking for 6490.75, hot put looking for 6405.75. So we have to zoom out quite a ways to see those. They aren't quite on Bookmap yet. I see them from my flow channel on the Discord. But those will be updating shortly on here as well. And we're just getting right down to that midpoint level. And there is some confluence between that midpoint and where some of these bids are starting to accumulate as well. So rejected at key one several times. Let's just go back to this other chart so I can show it a little more clean with both the data points. It rejected at key one several times, now rejecting our weekly pivot and rejecting the big green line, or the BGL, which is a EMA 21 on a 5-minute chart. All of that looking pretty darn bearish, and then the volume is just out of this world bearish. So this looks nasty. I don't see news yet that is giving us a sense as to exactly why this is happening. But there is some motivated selling going on here. And we can see some more weakness happening in Google, in Amazon. Some of these companies seeing just a little bit more selling pressure. Let's take a look at the NASDAQ versus the S&P. NASDAQ with tech really leading the way lower, as it was initially giving us some relative strength. Now it's giving us some pretty significant relative weakness. Look at the difference between these two charts. You can see the NASDAQ really showing a little more aggression by sellers, helping to pull it down. So we did get our wish. We got a little bit of range expansion for the 20-minute opening range. It's nothing amazing, but it's about a 13 handle opening range here, maybe a little shy of that. So we may get some interesting opportunities. I would say this is looking pretty heavy overall. Let's see if we get some range expansion to the downside. That is to say that we break below the 20-minute opening range and start to really show the potential for a downwardly trending market tape today. That would have me wanting to take shorts, especially if we retest the bottom of that 20-minute opening range. Let's also respect the flow. I'm watching that as it takes shape here. And it is put heavy. The hot put now trading 3,000 at 6405.75 in ES terms versus the hot call at 6470.75. So we can see these are starting to take shape lower. Now they're about even. And these opening flows are going to give us a bit of a sense as to where people think the price range may be as well. And so far, that's a pretty big range of opinions. Between the hot put and the hot call, you've got about 65 handles. So that's another thing that may give you a sense, especially if that flow continues to build at a decent spread, that we could have an interesting trading day, that we could have some room for that trading range that so far we've seen during regular trading hours to expand. And here we are back at that pivot level now, testing it from below. So this would be an area where I would look at considering actually offering some shares or selling short to the downside. Because if we can't hold above that pivot, then this thing looks really bearish to me. Welcome, Percy. And we did see just a little bit of iceberg selling into the end of that move, which is interesting. Just giving you a sense that some of the larger trading desks still either de-risking or building into short positions. Let's take a look at the NASDAQ comparatively here. And we can see sellers pulling down that point of control, almost like a bit of a stair-step pattern. That does tend to be a bit of a bearish look. Wow. Bit of buyer exhaustion in that move, pushing us now back above that pivot in the S&P 500 futures as well. That was some pretty aggressive buying on the NASDAQ. And so that may, as our indicator, this 3 vertical circles showing us just a bit of buyer exhaustion here. I got the audio alert as well. We'll see how that plays out. Let's look at the S&P, also a large buy program coming in there around the exact same moment. We've got consumer confidence coming up in just about 5 minutes here. And once again, S&P futures seeing some resistance at key 1 negative. So that is a negative gamma level built by put positioning, and it has been a formidable area of resistance so far. So just bringing it back to our chart showing the SPX options visualizer, you can see key 1 negative. We really haven't been able to build above there and hang above there for long. It seems to have been an area of pretty formidable resistance so far during the trading day. So if we do build above there and make a push and build some acceptance, that would be a change of character. We'd have to definitely look at that and respect it. Although I will say for now, I think it's best served to sit on one's hands until this data print comes out, see exactly what it has to say, because it can completely change the character of this tape if it is a meaningful outlier. So USCB consumer confidence coming up in 4 minutes at the top of the hour. That is 96.5 on the forecast, 97.2 prior read. And we really haven't had a lot of news coming over the wires to account for some of the volatility we're seeing this morning. It looks like it really is just the market deciding to barcode during that first opening half hour. And like I said, there's that cross current of institutional flow. It typically is one of the busiest times of the trading day. Mostly the afternoon wins in terms of the volume, but that's that last half hour, first half hour, both being the most active 30-minute periods during the trading day. Which to me, having been at this for a little while, usually means watch from a distance to see what the institutional flow tells us, and then try to take advantage of any trends that form that are supported by the flow. Speaking of the flow, let's zoom out a little bit. We can see puts have it so far almost actually in excess of 2-to-1. Hot put 13,000, warm put 12,000 versus hot call at 6,000, warm call at 6,000. So there is a pretty put heavy tape. Some of this is likely just in time hedging ahead of the market event, and possibly some of it ahead of NVIDIA's earnings tomorrow as well. And we've got data coming up in less than 2 minutes here. Taking a quick look at the NASDAQ, there was some seller absorption of buyer aggression earlier. Been consolidating ever since we saw that print. That is that square within the larger green circle, just giving us some context to that buyer aggression. And NASDAQ just balancing out around this point of control before we get this more decisive data print. And you'll note S&P futures well below this point of control that I've mapped out for them based on the overnight session, combined with today's trading. And just less than a minute, you can see liquidity thinning out. This is another reason it's important to be careful trading around these events that we have. Put flow continuing to build here as well. Data coming out in 40 seconds. Again, the forecast 96.5, the prior reading 97.2. This is U.S. Conference Board consumer confidence at 10 a.m. Five seconds. And we have a print of 97.4 versus a forecast of 96.5. So this is not a deviation. Richmond Fed also came out at -7 versus a forecast of -11. Also pretty much in line. So looking at the reaction in the S&P and in the NASDAQ here, pretty tame overall. I don't think these data points are going to be much of a catalyst here. So as we're building into the end of the session, for me, for this stream. Obviously, we have more time in the market, about 6 hours left. But for me, what I'm looking at here is that we are above the pivot, the 64.53, but we have a put heavy tape. So I'm not necessarily inclined to take a trade into this unless we break below this pivot level that we've talked about. And I'm just going to map this on screen here. I'd like to see a break below the put wall that we've currently just started to trade above. That was key one negative, and the 64.53 pivot and the VGL. So those are the three levels we're watching. They're quite close to each other. And if we're able to break below there, I think we could see some continuation to the downside. But I will preface by saying we are starting to see the midpoint come on screen. And typically that tells us the options flow is balancing out. So we may not get too much of a move lower. This may end up being a more choppy trading day. But if we do get that move lower, you could be cleared for about 10 handles down to this major pivot. That has been an area of support as well. So overall, a day that is a little bit of mixed signals. We are above the weekly pivot, but we so far have a somewhat put heavy tape. I'm just going to go back to the flow and look one last time here. And you know what? Call flow is starting to pick up a little bit more. Put flow here, the hot put at 14,064.04.50 and the warm put 6409.50. So let's just take a look at that on Bookmap before we close out. So we can see call flow picking up a little bit here, maybe the data giving the market a bit of a sigh of relief that the print wasn't anything to be too concerned about. And again, that's 97.4 versus a prior reading of 97.2 and a forecast of 96.5. For the bullish case here, since we talked about the bearish case, you heard what I wanted to see. A pull below the weekly pivot, put wall, and BGL, and put flow being heavy. For the bull case, you'd want to see the hot call trading at 30% or more volume more than the hot put. And we'd want to see a push above gamma 1, which is also the VWAP. That would break us out of the sticky zone, probably take us to this point of control, and then we could resolve higher to wherever the hot call level is. Right now, it's about 6494.50. So that's the two sides of this trade. We could potentially have a move as big as about 30, 40 handles in either direction if these flows continue and we start to see a little bit more directionality. But right now we have the midpoint on screen, and that midpoint is giving us a sense that chopatility is on the menu until we see one side of the flow increase significantly. It was the puts earlier. Right now, it's pretty much within balance. So we're sort of trapped in this trading range. And again, we had a 14 handle opening range. That's 40% bigger than what we had yesterday. But we want to see the flow give us some idea as to who's favoring a directional outcome with some degree of aggression. So far, we don't have that. It was looking like the puts, but now we're within balance. So I want to thank everyone for tuning in. Not a lot to see so far in today's tape. I came in thinking it was going to be a bit more heavy than it has been. It's actually been impressive how resilient the buyers have been. But overall, just kind of looking like chop on the menu unless the midpoint goes away. So thanks for tuning in. Catch you next week, 9 a.m. for the next episode of Back to the Futures with me, Markets and Mayhem.